Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Checking in on commodities, we'll start it off with the dollar, then gold, miners, oil, and natural gas. So the dollar did end up rejecting from our key 97.77 resistance level. The bulls sure got close, but unable to get over that, and now we're pulling back. So the two scenarios that I feel are most likely are we are either going to see an inverse head and shoulders pattern where we form a higher low and then turn around and break these resistances of 97.59 and 97.77, or we're going to come down, form a higher low, attempt that continuation, reject, and then drop to a lower low and head back to 95.84 support. So we have to be watching each day. The more we pull back from that top, the less likely the continuation move will be. If we form a higher low and we start some green days and get back over 97 to start this week, then the odds of continuation will favor the bulls. So again, technical analysis for us at the Chart Guys is not about predicting about what's going to happen. It's knowing the most likely scenarios and then using the clues to determine what is the most likely of the multiple scenarios. So for this pattern, we want to see a bear break if you are bullish gold or miners, because the dollar going down is good for gold. So you want to see a lower high and lower low back to test 95.84, which would put the monthly uptrend still in jeopardy if that were to happen. If the opposite happens and the inverse head and shoulders plays out, it's just another monthly higher low, and we're looking back up at the 98.37 top of 2000, pretty much almost the last 2 years. So it's going to be a very important pattern for the dollar longer term based on how this daily chart does end up playing out. And you could condense it down to the 2-day chart if you want it a little bit more clear, but it's going to be notable whatever way we break. Gold is still in its tightening pattern. We have our high, low of the pullback, double top, higher low. Not ready to call this a lower high yet. We don't have a clear enough rejection. The bulls are still making their move off of 1385 support, and I would have to see a more convincing loss of the 4-hour uptrend. While we pulled back very hard, we did not lose the 4-hour uptrend. So we have a low of 1385, higher low of 1389, 1400, 1403. So just these higher lows keeping the bulls in control, lose the 4-hour uptrend, then we'll call this our daily lower high at 1427, and the range will get even tighter. So gold is due for a break sometime probably this coming week, and if the dollar shows weakness, we'll look for gold to break the 1430s for continuation, and if the dollar shows strength, it's possible we break the 1380s and lose the daily uptrend on gold. I personally still have a position in NUGT for the senior miners, and I entered initially July 1st. I have sold and rebought a couple times mixed in here. It's a fairly small position because it is a swing position, and I am holding. This is probably one of the longer positions I've held recently, but I've had no reason to exit because gold and the miners have both kept their daily uptrend, and that's what I'm going based off of. So as long as that's the case, I'm going to hold on to this position, and we'll see if we can get a more convincing bull break this coming week. Key support here for GDX. We have a little base of support at 25.72, and bulls want to see a more clear break of 26.25 and 26.28 are recent tops. If we do get those breaks, bull flag on the weekly will be confirmed, and we'll be looking back then at a lack of resistance. We'll be looking up at 28.56 as the next weekly resistance level. Oil bulls still very strong. We did break 60.26. Again, we're watching the longer term monthly time frame. This pattern breaking, when it does break, probably late fall or start of the winter, probably late fall, we're going to be looking at a very notable break. We're either going to see a lower high here compared to 66.58. I feel that is most likely. It looked like we had topped out and set our lower high with the size of this pullback, a very quick 6% pullback in just a couple days, but the bulls rallied and came back from that. So again, if we form that lower high compared to 66.58 and then pull back for a higher low compared to 50.59, that's when we're going to stay in this pattern into the fall, in my opinion. We could set our lower high, let's say July, August, pull back for a higher low September or October, and then we'll look for a break perhaps November. So again, if I were looking to trade oil, I'd probably be slowing way down. And the only trades that I'd be taking right now is either bearish to top fish 66.58 resistance if we got closer to it, or just waiting for the break to occur and knowing that I have plenty of other things to trade. And just like gold was a multiple year monthly equilibrium pattern. We put out a video 7 months ago getting ready for the gold break, not trying to guess which direction the break was going to come, but knowing that a break was coming. And it's the same thing for oil. I don't know which direction oil is going to break, but I know that the tighter we get, the closer to a break we get. And when that break occurs, that's when the trading opportunity is there to go aggressive with these 3 times leveraged ETFs. If I try and trade aggressive in this tightening range, I'm going to get chopped up as far as fake outs on shorter term timeframes. I want to wait till there's clarity on the longer term where all traders are looking in the same direction, because it's a pattern that's been developing for so long, and we're patiently waiting for that in oil. Natural gas bulls keeping control, daily higher low established at 2404, and we need a break of 250 to see continuation. Keep in mind the weekly time frame, we are just looking for a lower high compared to 2688. Anything under that keeps the weekly downtrend intact. So while we have changed the daily trend, we're not changing that weekly trend anytime soon. And again, we're watching for the potential. If we do get another leg up, we'll have the left shoulder, the head, fail to break 2688, have to pull back for a weekly higher low, and then try and change the trend. If we are going to change the weekly trend, in my opinion, that is how it's going to take place, and we will be patiently watching for that sometime as we head into the fall. But for the short term, as long as we keep the daily uptrend intact, weekly consolidation is not underway, and after 250, we're looking at 256 as the next resistance level. So a lot to be watching. Gold had its long-term pattern breakout. We've got the dollar in a tightening key pattern. We've got oil in a tightening key pattern. I believe the dollar is going to break its pattern before oil, just looking at the time frames and how long we could stay within those ranges. And as far as the weekly natural gas chart goes, watching that sometime over the next 4 to 6 weeks. So I don't trade commodities very often. You know, if we have an anomaly of very extreme RSI levels, I'll do some day trades on it. But it's the kind of thing where I play the higher risk, higher volatility markets of crypto, MJ sector, then whatever spattering of other sectors are giving opportunity. But I wait for these commodities to give me these long-term patterns. And when they finally break, that's when I start trading them actively again. So I appreciate you watching. Hope you have a good rest of your Sunday. We'll continue to check back in on these longer-term patterns forever, as long as we're breathing. And we'll see you next time.
It's a duck triangle.